This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Hello, this is Hall Martin with Investor Connect. Today we're here at Amit Mehta, Builders VC. Amit, thank you for joining us.
Oh, thank you for having me.
Great. So what was your background before investing in early stage companies? What did you do before this?
So I spend my time 2/3 as an investor at Builders VC, and then 1/3 as a practicing physician. So my background is medicine, and I'm what is called an interventional radiologist. And what that is we do minimally invasive image-guided surgery. That means little holes in the body that are move robots and tubes and things through the body to solve problems.
Well, great. And so what excites you right now?
So at Builders, one of the key verticals we work in is healthcare. And healthcare is something that's obviously close to my heart and is a true passion of mine. We have been investing in healthcare for quite some time and have seen the evolution of the application of technology to solve a lot of these problems. Healthcare is really tough to work on. There's so many facets, from technology to payers to patients to clinical protocols to clinical trials to hospital administration. I mean, it goes on and on and on. And so for a company to solve problems in the healthcare space requires a significant amount of vertical expertise across the stack of what is required to be successful in delivery of care.
Great. And so what's your advice for people investing in startups in, say, the healthcare sector? What do you tell them to do before they write that first check?
What we look for, and I think has been a good bar to look for, is that we're looking for the intersection of tech folks and healthcare or clinical folks. I think the tech folks are really good at what they do, but they need help understanding the problem and understanding how the solutions fit in the current delivery of care. And the healthcare folks know really well what the problems are and what they need to solve, but they don't know what the tools are there that are to solve those problems. So when you see teams that are hooked up with both those constituents of folks, we see a great amount of success. When it's one or the other, we get a little hesitant because it's difficult to solve the problem unless you're coming at it from both angles.
Oh, great. And then on the other side of that table, what do you tell startups who are launching their business in the healthcare sector? What should they think about before they launch or go out to raise funding?
One thing that's big for me as a practicing physician and someone who understands the reimbursement mechanisms and how to get paid in healthcare, well, we tell all the companies we work with, it's great to have an idea. And a lot of companies outside of healthcare are started by colloquially two people in a garage, iterating on an MVP kind of thing. In healthcare, it's a lot more difficult to do that because of HIPAA, data access, clinical trials. So I advise companies that work on your problem and make sure you understand the full round trip from before you start of where is it going to be applied and how are you going to get paid. If you're working on a device or a drug or even a technology that requires either commercial payers or governmental payers to pay, then you need to understand how CPT codes work and how the RUC works and how reimbursement works. It's great to build the greatest product in the world, but if you're not going to get paid for it, no one's going to buy it. And in healthcare, it's not trivial to get reimbursement just because of the multifactorial issues that go into getting something validated and getting something out to market.
Great. And so how do you see the healthcare industry evolving in these COVID times? What do you see accelerating and deaccelerating, and just where do you see it going?
One of the core healthcare theses we have at Builders is the movement of the locus of care to around the patient, whether that's at home, whether that's in an urgent care or ER, basically out of tertiary care centers or hospitals. And COVID has accelerated that movement. We've seen the advent and the acceleration of telemedicine and telehealth, and the government has stepped up. And prior to COVID, reimbursement for telehealth or telemedicine was very different. They brought it to parity on inpatient, in-person visits now. And a lot of physicians and a lot of providers have moved to telehealth for a portion of the time because they had to, because of social distancing. And now because people have realized that the technology is really good and it works really well. And for the correct patient and triaging the right people, telemedicine is really, really good. So we've seen significant acceleration in specific technologies in healthcare and medicine. IoT, remote sensing. Patients are isolated at home, but just even simple things like temperature, respiratory rate, heart rate, blood pressure, IoT devices that hook into platforms and provide that data to caregivers has accelerated telemedicine and made that a lot more effective, that you can provide effective care in the home setting. So a whole set of technologies we've seen are doing well because of COVID as opposed to in spite of COVID.
What's the biggest change you think we're going to see from COVID in the long term? Is it simply telehealth, telemedicine, or you think there are other things that change because of COVID that will see a big impact in the future?
I mean, at the beginning of when COVID, I think it's split into about a third in terms of how COVID is impacting the healthcare system. The first sort of, I would say in March and April, we were just trying to keep up. There was so many patients coming to the hospital. People were sick. We were learning more about the disease, learning about the virus, learning about treatment. The following sort of third in sort of the May, June, July phase was more patients were going into the chronic phase of lung injury and understanding how to deal with those people. But we also then had a moment to breathe and start working on some of these problems and understanding how technology could change it. So I think this last sort of phase we're going to go into now, which is the tail end of where, we understand how to treat these patients. We understand more the long-term impact. It's from a clinical perspective. Now we have an opportunity to use the COVID pandemic to accelerate technologies like telemedicine, IoT, things in the germ insecticide space, and things that are technology that are around allowing patients to be taken care of outside the hospital.
Right. Do you see healthcare moving to the home as a key thesis there?
Yeah, I mean, for us at Builders, that is one of our key in our healthcare thesis, which is a little more involved, but the primary driver is this point of care service. And we see a concerted effort to move care from the hospital to the home by all levels of providers. It's the reimbursement is challenging, but it is something that payers are championing. Even hospitals are championing as they acquire primary care and move out into the community. But we see more decentralization of care historically just because hospitals and clinics are inefficient and they become obsolete. And these tools like mobile diagnostics, remote monitoring, other delivery system cares, as well as payer mix systems will promote more of that. And basically, I mean, patients want it. If you need a refill on a prescription for your thyroid synthroid medication and you feel fine and don't have any symptoms, I mean, you don't need to go into your doctor to get that. Currently, as it stands, you need to go in to get, for the most part, your doctor wants you to come in and do a checkup and that kind of thing. If a physician could do that or a provider could do that with telemedicine, make sure that you're not having fever, weight loss, any of the symptoms that would indicate that your TSH is off, then they'd feel comfortable, again, with remote monitoring. Your vitals, they can check that your respiratory rate is not running high, you're not tachycardic, your heart rate's not running high, you have no systemic issues from being short on your medication. They would feel comfortable prescribing that medication. So that saves both the system and the patient a lot of effort, and everybody wants that.
Well, let's talk for a moment about your investment thesis for your fund. What exactly do you guys look for, and what do you make decisions on as far as funding startups?
Sure. So we are a $200 million Series A fund, early stage VC. It's a 2017 vintage fund going into a second fundraise now. And we invest across 4 verticals. And our thesis is around solving real world problems in large antiquated industries where technology investment is deficient. So if you think of agriculture as a good example, cattle farming is something where most cattle farmers are still using paper or Excel. There's very little platform technology to monitor cattle. And you can layer on now, if you build a tech platform, IoT to monitor migration patterns, temperatures. You can put sensors in milk. You can put sensors on the cows to see weight gain, how they move, a whole host of technology on agriculture. In agriculture, as a percentage of revenue spent on IT is 0.3%. And so the other three verticals we work in are real estate and construction, where technology is 0.8% of revenue spend, industrial technologies with the catch-all of internet, where it's 1.4%, and healthcare, which is 3.2%. The place where we stay mostly out of is fintech, where it's overinvested for that particular vertical in terms of the percentage of revenue spend is around 6.3%.
And are there a couple of startups you can call out, one or two that fit that thesis?
Yeah, sure. So in healthcare, again, is where I spend most of my time. A good example of an investment we've made is in a company called Carbon Health. And Carbon Health built a technology stack for the provision of primary care from the ground up. So they've been able to open clinics and run clinics much more efficiently than traditional either physician-owned or corporate-owned clinics, both in the primary care and the urgent care sector, by using technology. And that's using technology across the board. So as a patient, if you have an issue, it starts with an app on your phone, and you input all of the information that normally when you go to the physician's office or the provider's office, you would end up filling 20 pieces of paper in. Then you would go to the physician's office and then tell them, I'm short of breath. That happens when this and that. In Carbon Health, they basically acquire all of that data up front before you hit the clinic. They can then triage you appropriately to the level of provider that you need. They can make sure that they've ordered the correct tests before you get there. They can tell you, for your type of issue, you need a X number of minute visit. And we have an opening because they have real-time scheduling 20 minutes from now if you can make it. They can have clinicians see more patients per hour because they're triaging effectively. If your issue doesn't need a urgent care or ER visit, then they provide you telemedicine resources. And the whole system is electronic. So as soon as you're seen and you're either sent to a specialist, all your information is transferred electronically, or all of your test results are immediately available to you through electronic means. So the entire tech stack has been replaced. So if you take a typical physician's office or urgent care, we're often using between 8 and 12 pieces of software. We use a scheduling piece, a billing piece, clinical piece, an EHR piece, and et cetera, et cetera. This is all in one stack.
Great. And so you talked earlier about the challenges in the healthcare space for the startup. Instead of repeating those, maybe you can talk about what do you think COVID did to change those? It seemed like it speeds up reimbursement for telehealth, but what other changes do you think COVID is bringing in this space?
It's interesting. If you take a step back and I sort of look at COVID's impact on investing, not specifically in healthcare, but what I've kind of experienced in venture capital, I think it's split sort of down again in a third, in that a third of people just sort of stopped investing and said, we're going to wait till COVID's over and we understand what's going to happen. A third of folks said, this is just regular business and our companies are set up for this kind of issue. And we're going to grab the bull by the horns and see how we can accelerate business through the COVID period. And the third sort of looked in the middle and didn't really know what to do or waiting for opportunity, whether that was scooping up vulture type investments or doubling down on existing investments to try to just make it through. We sort of felt in the category of our portfolio was well diversified and well set up for something like COVID. So most of our companies accelerated through that process. I mean, especially the healthcare ones, obviously Carbon Health being a good example, where COVID just accelerated their growth. They grabbed the bull by the horns. They became the largest tester for COVID in all of the state of California. We set up COVID programs for commercial clients and that kind of thing. But most of our companies across all of our sectors weathered the storm well and continue to grow with the right infrastructure through the COVID period.
Great. Then on the other side of that table, what do you think the challenges are for the investor post-COVID? How do you see their work changing with this new set of care-abouts?
The biggest thing I think has been virtual meetings. We're in a very high-touch people business, and prior to COVID, our usual methodology was slide deck, phone, a virtual interview, but then we had the entrepreneurs come in because a lot of investing is around the entrepreneur and how we feel in our relationship and do we get along and how are we going to work with these people on a board for a long-term growing a company. The elimination of that sort of hand-to-hand interaction has been very, very challenging. I would say at least half or more of our investment into something is based on the people, and not being able to meet those people has been difficult.
Understood. And so we talked about a number of different sectors and applications, but if you had to pick one or two going forward, say in the healthcare space, which one do you think investors should pay the most attention to from here?
Specifically in healthcare, the other places where I see and we as a firm see significant growth is sort of three other areas. One is around data. We're collecting a lot of data in healthcare now as platforms are built and interfaces like Fire and some others allow the connectivity that we didn't have before. So we see a big growth, and it's a cliche term, but big data. But we see innovators who are actually putting ROI on top of these data sets. So that's one big cluster. The finance of healthcare is another big cluster. Healthcare represents 17.7% of the GDP. The models of reimbursement are antiquated. Fee for service is probably not going to last forever. We're seeing a lot more value-based care and a lot more novel reimbursement mechanisms based on using tech to have preventative care and better care of patients. And carbon, again, is a good example of that. So finance is a big place. And then last is precision and personalized medicine. So we're seeing it's coupled with this movement, or what we believe is the movement of locus of care out of the hospital to the individual, becomes much more relevant, and it behooves providers to understand individuals at a new level. And precision medicine, whether it's genomics or proteomics or metabolomics or all of the omics, we're getting a better understanding of the individual and specific differences in individuals for personalized medicine that allows us to provide better levels of care and more personalized care that can reduce cost because we know specifically what therapies are going to work for that person if they have an issue. So those are the three other big areas of focus we see in healthcare.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
I think I spent my early career sort of working. I've been an operator as well, and have a startup company that we've been working on for a while. And so looked at this from several lenses as both an operator, an investor, as well as several other sort of lenses. I would tell people raising money is really hard, but if you have a good idea and you have the tenacity to follow through on it, and I tell my kids this all the time, you can't give up. There's going to be lots of no's. And one thing I think entrepreneurs don't always understand is a lot of times at builders, for example, we'll say no, not because the idea is bad, but because it doesn't fit within the goalposts of what we do as a fund. We're a Series A fund. So we have to write checks at a certain level of a company that we can see growth for venture returns. And if you're too early or too late for that particular goalpost, us saying no is not a knock on your company. It's just, it's not the right fit for this fund. But if you keep looking and you find and titrate down to the correct investors, you'll get an investment. So if you're pre-revenue, we're not the right fund for you. We have a seed portfolio, but you need to do an angels, friends, and family round. Get your family to believe in you and get an investment. Later stage, then you need bigger firms who are larger, writing bigger checks.
Great. Well, that's good feedback to the audience. So how best for the listeners to get back in touch with you?
The best way I think is probably email or LinkedIn. We're happy to look at all deals, and we usually give a quick yes or no, just again, based on understanding where our goalposts are. And we're happy to connect people into our networks of either seed funds or later funds. So I would say to people, don't hesitate to reach out and send your information. In sort of 2020, we've flattened technology. It used to be 15 years or 10 years ago, you had to have a warm intro. Well, it's great to have a warm intro. We're happy to look at ideas and very quickly give feedback around an idea of whether it fits within what we're doing as a thesis. So happy to reach out and best to send a deck with an intro and follow up.
Well, we'll put those in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Absolutely. Thank you for having me.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Amit Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.